A very warm welcome to this newest episode of the Finmet Mondays podcast. The most central talking aspect from last week has been the Iran-Israel war, and all eyes are on looking at the developments now that the US has intervened in this war. The latest is that US has successfully struck Iran nuclear sites. I wanted to ask you, where do you think the war is going to head, and eventually how this might impact gold prices?
The fact that the US attacked Iran yesterday morning, Sunday morning, it really will, in my view, escalate the war in the Middle East up a few levels, a few gears. Iran will retaliate for the US bombing, and that could also involve targeting US military bases in the Gulf region, in, say, Saudi Arabia, Bahrain, Kuwait, UAE, and also the possibility that Iran will try and close the Strait of Hormuz, which is that inlet of water between the UAE and Iran, and which accounts for around 20% of global oil transport out of the Gulf region. And that in turn could spike oil prices to pretty high levels, like over 120, $150. It seems as if by the US entering the war, it's going to create a broader regional conflict.
Definitely. The other development from last week, Ronan, was the US Fed delivering its interest rate projections. What did you make of how they went about it, or anything that Chair Powell said that caught your attention that might influence our understanding of how gold prices might shape up in the later half of this year?
They gave the impression that they want to have a wait and see attitude, that they don't want to cut rates right now. And that at the moment, the next meeting in July, there's only something like a 17% probability that rates will cut down. If that is the case, and it looks like it is, it can put off momentum traders and short-term speculators that had previously thought that the US would cut interest rates sooner rather than later, and in that way they could be liquidating positions.
If you had to summarize what the outlook is, let's say in one line, given that there is a lot of fundamental support for gold, but there are also short-term bearish pressures, would you say that gold's outlook for this week remains biased towards the upside, or do you feel it is going to remain pressured to move more towards the downside, as we had seen last week, and maybe break that 3,300 level?
I think the geopolitical developments yesterday, Sunday, are definitely quite strong, and the market in a short-term reaction will allow gold to move higher. But those headwinds, like a stronger dollar and the anticipation that the Fed mightn't cut interest rates, are going to be dampening down. So as we go further into the week, that initial spike because of the geopolitical and war premium might be dissipated as the market digests all of the information.
Thanks a lot, Ronan. Thank you so much for sharing your views, and goodbye.